George of the jungle, strong as he can be.
George, my wife and I are thinking about buying a home within the next 2 to 3 months, but we don't want you to pull our credit report yet. We're working on cleaning up some things, and we just want to wait until we have that cleaned up before you pull the report. Wrong decision. Thanks for coming into the creditjungle.com today. This is George Anderson, and that conversation that I just played out for you happens way more often than it needs to. And here's how to avoid some very, very expensive and costly mistakes. So hold on with me for a little bit here. Now, I'm not going to get into every loan program on this. I'm going to paint with a little bit of a broad brush again here. And we're just going to kind of keep this within the confines of FHA, VA, and conventional loans. Okay? So you'll have to, now it depends. Well, what do you have? I mean, I'll ask people, just kind of go, you want to pay off all your debts. Well, what kind of stuff do you have on there? Well, we just have some student loans, okay? And we just know that our credit score is going to be higher if our student loans are paid off, and we've got $20,000 worth of them, and we're just going to pay them off before they're all done. Okay, that's an installment account. Okay, so whether it's a car loan, a consumer account that has a fixed term payment on it with a fixed payment, student loan, whatever, do you need to pay those off? Now, as far as your debt ratios are concerned, maybe it would help. Okay, depends. We need to know what your income is first and then factor it out from there. But we're going to confine this to your credit score and your credit rating, if you will, because those are two different things. But paying off an installment account, does that improve your credit score? The answer is no. It does not improve your credit score. How about your credit card accounts here? Now, a lot of times people will say that, well, I just want to get all my credit cards paid off, and the big mistake they make is that they'll close them once they're paid off, and that's a big mistake, because what it does is it reduces the amount of available credit you have. That account gets scored differently, and it's not going to help you at all. But does it have to be paid down to zero, or is it okay if you leave some nominal balance on there? And the answer is that this is, again, case-by-case basis. So I'm going to put on here, this one's kind of a maybe over here, but if somebody has got, say, $10,000 spread out between 2 credit cards and both of them are maxed out and you have a $5,000 limit on both, then yes, it's going to help you to pay it off, but paying it down by maybe 70% might do the same improvement on your credit score as paying it off. So why would you want to spend 10 grand to improve your credit score if you only need 6 to do it? Something to think about. Collections is the next thing on here. Paying off a collection account. Does paying off a collection account improve your credit score? Well, the answer here is no, it does not. And we've had discussions on this about having a pay to delete versus getting it just paid in full. Paying a collection account off. Now, there's certain circumstances where if you have a cumulative total of more than $2,000, a lot of this depends upon what the automated underwriting findings come back and say. But for an FHA loan, you can't have more than a cumulative total of $2,000 in collection accounts. So you might have to pay down some of them to be able to make the file work. But as far as helping your score, paying it off is not going to work. Getting it paid to delete, that's a good thing. So I've got other videos that I have talked about this process, so I'm not going to go into too much here. But here's one that a lot of people have not considered, and these are charged off accounts. Typically, a charged off account is a revolving account or maybe a vehicle loan where the vehicle had been repossessed, got sold at auction for 10 grand, and there was $20,000 owing on it. So the $10,000 on there is considered a charge off on there. Well, it depends upon what type of loan that you're doing, and again, you've got to go back and look at the automated underwriting findings. But I have had loans come through that were approved with in excess of $20,000 of charged off accounts, and it's not just all on one account, it might be 2 or 3. Now, are your scores going to be good if you've got charged off accounts? No, you're probably not going to be anything higher than mid to upper 600s on it. But does paying it off help? No, it doesn't. And it might not even be necessary to be able to get the loan. So I'm going to put another X here by this. And the main thing that you need to understand about this process here is that, let's just say somebody has, let's just say they've got $40,000 to work with, okay? If you went out and basically allocated this money towards what you thought you needed to do to raise your credit score, and in the process of taking these actions, you wiped out what your liquidity was, I have seen this happen where not only have you not improved your credit score, not only, and you didn't need to be able to get the loan, but the other thing is that you don't have a down payment anymore, okay? The charged off company, they're not going to give you the money back. The collection agency, they're not going to give you the money back. And the same thing here unless you apply for another loan. Your revolving accounts, yes, you can go and charge those back up again. Okay, that's fine. But this is a sunk cost. This is money here that you unnecessarily spent thinking that you need to do this to get a loan, and what you did is you actually shot yourself in the foot, because this is a sizable down payment that could have got you maybe even a conventional loan, okay, depending on what these dollar amounts are here, without having to pay any of these things off, without improving your debt to income ratios as far as what you can qualify for, and certainly you didn't do it for getting a better credit score. So please don't think that waiting to pull your credit report until after you've done what you think you need to do is going to help you, because you may have really put yourself into a bad situation. So I don't care if I've got to pull your credit report 2, 3, or 17 times during the course of a year or 2 years of working with somebody. It's never going to be that long, let's hope. But it's a lot easier to find out, let's look at where the damage is right now. Let's run it through automated underwriting based on what type of loan programs that you might qualify for, and let's go in with a scalpel instead of a sledgehammer and preserve as much of this money here, not for paying off creditors, but for a down payment to make you a stronger buyer. So anyway, thanks for coming into thecreditjungle.com today. This is George Anderson. You can push button, get mortgage professional, and I'd love to help you with your personal situation in getting a good loan. Have a great day.